Hi everyone, welcome to our channel Code Resist. Today we're going to demystify a crucial financial term that every investor should understand: market capitalization, or simply market cap. Whether you're a seasoned investor or just starting out, knowing about market cap will help you make informed decisions. So let's dive right in. Market capitalization is a straightforward yet powerful metric used to determine the total market value of a publicly traded company's outstanding shares. It's calculated by multiplying the current stock price by the total number of shares a company has issued to investors. This gives us a snapshot of the company's size. But why is this important? Market cap tells us about the company's scale, the investment community's perception of its future prospects, and helps us compare its size relative to others in the same industry. Let's look at an example to make this clearer. Suppose a company named Tech Growth has a current stock price of $100 and $1 million shares outstanding. By multiplying these together, Tech Growth's market capitalization would be $100 million. This number places Tech Growth within a specific market cap category. Companies are typically classified into three main categories based on their market cap: large cap, mid cap, and small cap. Understanding these categories can help you diversify your investment portfolio and choose stocks that match your risk tolerance and investment goals. However, it's important to remember that market cap is highly dynamic. It changes with the stock price, which can be influenced by various factors, including economic conditions, market sentiment, and company performance. And there you have it. You now understand what market capitalization is and why it's a key indicator in the financial world. If you found this video helpful, please give us a thumbs up, subscribe for more financial insights, and share your thoughts in the comments below.